That's how large we think it is. Over the past 5 years, revenues have increased at a compounded rate of almost 48% annually. And you may recall that this occurred around the time when Tesla was the subject of considerable debate. Elon Musk, CEO of Tesla, is not a union supporter, but he may be secretly rooting for Sinn Féin right now. The United Auto Workers head is pushing ambitious contract demands and shows no indication of backing down from Detroit's big three manufacturers. With the United Auto Workers strike entering its 20th day against the Detroit Three and rising interest rates, ETFs that track the auto industry suffered net withdrawals last month. Production at GM, Ford, and Chrysler parent Stellantis has taken a beating. This has led some to believe that it would benefit Tesla at a time when conventional automakers are making more strides towards electric vehicles. Wedbush analyst Dan Ives warned that if a strike occurs, manufacturing and the EV roadmap might be delayed until 2024. This is a critical time for GM, Ford, and Stellantis. He also noted that Tesla is well positioned to gain from any work stoppage at its competitors. I expect this to be the most dramatic and devastating strike in half a century. Don't make me pick on Tesla. I want to hear about all electric vehicles. Yes, can Tesla take heart from this? Where does the city of Detroit stand at this moment? Okay, sure, because if there is a strike, output will drop even further. The supply chain, I believe, has opened up just now. Unfortunately, that means there will be a plethora of inquiries regarding it. However, personally, I don't believe this has anything to do with the strike. All signs point to a movement in customer taste towards better electric vehicles as their prices continue to drop. Tesla is at the forefront of this price drop, since it is the first to transfer savings on to customers. So, in my opinion, that's a fantastic thing for Tesla. Business professor Eric Gordon at the University of Michigan told NIM and Barclays analyst Dan Levy predicted an impending strike. Also, it's slowing down the automakers in Detroit. If a strike against General Motors, Ford, and Stellantis lasted for 10 days, it would cost the companies about $1 billion, as estimated by the Anderson Economic Group. A labor stoppage lasting 3 weeks or longer would quickly deplete the almost 2 million automobiles in stock at the Detroit automakers as of the end of July, leading to higher pricing and increased sales of non-union brands. According to analyst Sam Firani, Cathie Wood recently discussed her thoughts on Tesla on CNBC's Fast Money, where she forecasted that Tesla stock would surge to $1,400 or more by 2027. The bear case that Wood presents for Tesla is a price of $1,400. In her opinion, Tesla's share price is expected to increase by a greater amount than that during the next 4 years. The main complaint we hear is that these cars are too expensive. That is exactly what is happening. As you can see, that is shifting in the UK. Rishi Sunak is delaying until 2035 instead of 2030 his plans to eliminate all internal combustion engines. Are we underestimating the magnitude of this change and its accompanying difficulties? Not in our opinion, no way, no how. We calculated the true cost to own the system. This is happening right now in the USA. While things are slightly different in this country, electric car TCOs have been competitive with gas TCOs for the past few years. Rates will be displayed soon. Do you offer coverage with that? Yes, coverage included. Yes, there are regional variations. Unfortunately, insurance is not included, and Tesla is so confident in the safety of its vehicles that it is offering insurance at no extra cost. That is indeed all-inclusive. All. Wood does expect Tesla's sales of electric automobiles to rise rapidly. However, she revealed to Melissa Lee of CNBC that EVs account for only around a third of ARK Invest's estimated price of Tesla. The value of ARK's autonomous car division accounts for the remaining two-thirds. In particular, he sees a huge opportunity for Tesla in the growing market of autonomous ride-hailing services, sometimes known as robotaxis. According to a report published in April by ARK Invest, Tesla's yearly net revenue from autonomous ride-hailing might be in the neighborhood of $200 billion by 2027. That's the bear scenario, remember. Moreover, ARK anticipates that Tesla will introduce a robotaxi service sometime around the year 2024, despite the fact that there is now no such service available. Or, as seems more plausible given the timing of the CNBC interview, Musk would argue that Tesla has a significant edge because it has more data than all the other autonomous car firms combined and declare Tesla to be in the lead in the United States. The head of ARK Invest doesn't think Tesla will be able to monopolize the robotaxi market because of its advantage. However, Wood predicts that the market for autonomous ride-hailing services will be a winner-take-all scenario, and that Tesla will emerge as the industry leader because of its focus on passenger safety. The number of Americans killed in automobile accidents is increasing, she said. Driving while texting is a major problem. The vast majority of car crashes occur because of human mistake. Wood believes that moving towards AI-driven vehicles can help solve these issues, as he claims that Tesla drivers are 40% safer with autopilot and FSD than those in conventional cars. In April, ARK Invest announced that their analysis showed that the FSD in a Tesla was 5 times safer than a Tesla driven by a human. You might be asking if Wood's bear case for Tesla involves a return of more than 5x by 2027, adjusted for use on regular city streets exclusively. Why does she think the stock price will go up? Over the next 4 years, ARK Invest predicts that Tesla's share price might increase by over 9.5 times to $2,500. This bullish scenario predicts that by 2027, Tesla's robotaxi business will have generated over $600 billion in revenue. There are many who, very reasonably, find Wood's bear case price prediction for Tesla to be equally implausible. Her stock price forecast, however, will come true if her predictions about the robotaxi business and Tesla's advantages in the market pan out. Cathie Wood, founder of ARK Invest, is widely known to be an avid Tesla supporter. However, recent share sales by the manufacturer have caused some observers to worry. Fortunately, Wood explained why she was selling shares and affirmed that she is bullish on Tesla's long-term success, as had the confidence of the investment firms, which had grown over the course of the year. Wood has sold off a lot of Tesla stock in recent months, but she nevertheless expressed optimism in the company in a recent Q&A with Barron's. She still has a $2,000 price objective on the automaker's shares despite the recent sell-offs, which Wood attributed to simple portfolio management. Since Tesla lowered their prices, we have more faith in them. Barron's reports that Wood said Panasonic is one of the few automakers in a position to do so, thanks to the company's position on the declining cost curve of consumer gadget batteries. The other manufacturers will suffer because their costs are higher. However, the sell-offs were not ignored. Cathie Wood, who heads ARK Invest, recently made headlines by selling more than $25 million worth of Tesla shares. Given ARK's past strong attitude on the electric car manufacturer, this disposal indicates a nuanced approach to portfolio management in the face of changing market realities. ARK's flagship ARK Innovation ETF, ARK Autonomous Technology and Robotics ETF, and ARK Next Generation Internet ETF collectively sold 97,599 shares of Tesla. At that day's closing price of $261.16 million, the sale was worth $25.49 million. The value of Tesla stock increased by 5.9% in a day. The strategic realignment emphasized by ARK Investment's decision to sell off a sizable stake in the Elon Musk-led enterprise. This decision by the fund is especially surprising given Cathie Wood's previous support for Tesla. Possible reasons for the sale include a need to adjust ARK's investment strategy in light of new developments in the market. However, Tesla now controls over 60% of the U.S. electric vehicle industry, and the Model Y is the best-selling car in the world. ARK Invest forecasts global EV sales of 60 million by 2027, with Tesla maintaining its position as market leader. Wood sees Tesla not simply as a car manufacturer, but also as an artificial intelligence stock. This is partly because of its autopilot and full self-driving FSD beta systems, the latter of which employs human drivers' actions and data to educate its AI towards a future of autonomy. According to Tesla CEO Elon Musk, high profit margins similar to those seen in the software industry could be generated by a future robotaxi service made possible by autonomous driving. Nonetheless, Wood believes Tesla will continue to be the market leader for autonomous taxi platforms in the United States, and she predicts that Tesla will sell its robotaxi services at a lower rate than Uber or Lyft. Wood and ARC's optimistic forecasts for Tesla and her concentrate on autonomy, and Dill anticipates that the firm will perform better than its competitors in this sector. She also mentioned during the interview that one of Tesla's competitive advantages is the accumulated real-world driving data of billions of kilometers that is used to train algorithms to educate the car how to adapt to uncommon situations. Nobody has been able to accomplish this because they lack the necessary data. Stay tuned by subscribing.